More owners of distressed office properties simply choose to walk away. I know it sounds kind of crazy. Who would want to walk away from a massive skyscraper like this? But this is happening everywhere, right? If you go to places like Chicago, San Francisco, and you just go to some of their downtowns, we're looking at emptiness to a whole new level. I mean, we all talk about how bad like the Chinese property market is and how there's like a massive bubble pop and how a lot of people aren't really buying Chinese properties. Well, American downtown properties are no better, guys. You see all these buildings in San Francisco, congrats, they're like 70% off. And I'm being dead serious, guys. And even some other places where there's a lot of tourism, like Chicago, a lot of owners are like, we're just gonna leave it rotting. They're just gonna leave. They don't care about it anymore. And even the banks don't necessarily want to get these buildings because they got to pay property tax and a bunch of other things. Check out what's going on in Chicago. I've covered this building like a few times already, but it's just so interesting to see. One of the biggest deals for the new year literally went for pennies on the dollar. This building went down 90% in value. It's 12 stories, pre-war, great retail space, offices, even got like maybe 4 balconies and maybe like a rooftop. The building overall looks good, and if you sell this in Manhattan, it's going to be like $100 million plus. But in Chicago, it's $4 million bucks. I mean, the prices are just so low to the point that some people don't even bother selling their building. Like, you know, if this building sells for $4 million, like that building behind it probably just had a heart attack. Like, this landlord behind this building probably is like, oh crap, my building's probably only worth like 2 to 3 million bucks. Is it even worth going through the trouble of selling and doing all the hassle work? I mean, the paperwork probably costs millions of dollars. So many of these buildings, when they're super worthless, they just let it rot. They just throw it on the street. They don't want it anymore. And I guess somebody could pick up the bags later. But the mere fact that a building of this caliber sells for pennies on a dollar shows you that the U.S. commercial real estate market is in massive trouble. And if you look at these buildings here, like this near the Loop, you know, it's like a 2,700 square footage of space selling for $4.8 million. Get out of here. You're not selling this retail space for $4.8 million, unfortunately, when you could buy a whole building for $4 million bucks. So if you look at what's going on here, even mortgage investor JER files for bankruptcy, one of the latest property firms to crash in the US. And these guys are not necessarily small. They're pretty big, with like almost $1 billion of assets under management here and there. They also have a lot of subsidiaries as well that owe hundreds of millions of dollars, and they have pretty much filed for bankruptcy. A lot of the properties did come from losing streaks of commercial properties, which is pretty tough. And check this out. Muddy Waters. These guys aren't dumb. These guys are smart. If you want to have a good short bet, just do what Muddy Waters is doing, guys. Muddy Waters is pretty intelligent in terms of playing the market. These guys have billions of dollars under management, and the whole point of Muddy Waters existed is to short companies that they think are bad. So Blackstone Mortgage Trust, one of the biggest mortgage trust REITs in the world, not just the USA. Try to mess with Blackstone, you better have some big balls. Because Muddy Waters, they're going all out on this massive short bet. They're pretty much saying that Blackstone Mortgage Trust has too many commercial property units, which they do. They also loan out a lot of money to commercial real estate properties. And recently the dividends were pretty juicy. But what Muddy Waters is saying is we could be seeing a massive decrease in terms of profitability from Blackstone Mortgage Trust, which will actually cause a lot of investors to run away. They're betting on Blackstone Mortgage Trust REIT to have lower dividends by Q2, which is pretty realistic. You know, interest rates aren't necessarily going down, and that's going to put a lot of pressure on a lot of these companies. And guess what? Inflation is up. I can make a whole new video about that, and it's pretty exciting to see. So let's see what happens, guys. You know, a lot of these properties are junk properties, right? We talk about junk bonds and crappy investments, but it's getting to the point that even commercial buildings, these shiny buildings which are known to have stable investment value, being worse investments than Dogecoin. So thanks for watching, guys. Comment below, and before we leave, check out the private Discord server, guys. 7-day free trial, $20 a month, and we're doing a lot of amazing trades. Like recently we made like this UNH call, 105% gain, and all of our trades are live every single day. Trade with us, guys. Make some money with us. It's a fantastic server.